Good morning. This is Tom Alexander. It is Sunday, January 29th. It is 12:42 a.m. Eastern Time in beautiful Charleston, South Carolina. This is the video addendum to the written report that I send out every week. If you are not receiving that report and you would like to receive it, it's free. Just send me an email to tom@alexandertrading.com. I'll put you on the list. Also, it would be a huge help to my channel if you would like the video, if you would subscribe. By all means, make comments, ask questions. I'm happy to. I will respond to all reasonable comments and questions. Feel free to send this to all your buddies in chat rooms. Okay, let's talk about this week. We have the next latest and greatest exogenous event is the Fed meeting on Wednesday, at which they will announce a Fed hike of some degree, and then the real fireworks will begin during the press conference when people try to parse out what Powell is saying regarding Fed policy going forward. That's out of my depth. I don't think that's tradable information. If you can trade that, good luck to you. I'm a price-based trader. Let's take a look at price and what it is telling us. Okay, something, and you guys can go back and you can validate this yourselves. On my screen are the four primary U.S. trading indices: the S&P, the Dow, the Russell, the NDX. They're composed of different types of stocks. For instance, the NDX heavily technology, etc. Russell's the 2000 stocks, is the broadest, etc. The Dow has, the fewest number of stocks. However, I understand all that. But when there is a strong trend up or down on an intermediate term time frame, all four of these will move in lockstep. And what has happened beginning at last fall's low is that we have this disparate activity between a couple of the indices. It depends on which two at any given time, and then among all four. And that is one thing that has made this market confusing and a little bit difficult to trade, because the intermediate to long-term trend is very much in doubt in this market. Now, shorter term, we are at significant inflection points in all four of the indices, but again, we're at a little bit different levels in terms of those inflection points. So if you look at the SPX, we came right up on Friday to the double top that was formed. You had a top on 12.1, and then you had a top 12.13, and we've tested it and could not break through that level. You can see the Russell down here closed just slightly above this very important level, right at or just above its equivalent level, as did the NDX. And then you have the Dow lagging. The Dow has some work to do. It will be bullish next week if all four of these indices show strength following the press conference on Wednesday. At least short term, that would be a sign of strength and probably further immediate gains. The critical downside levels, and all of this is put in the written report. The levels are in the report. The levels to keep an eye on now will be the general guideline when you're in a strong trend is the 2-day back extremes in this case. In other words, in an uptrend, you really don't want to see closes below the low of the previous 2-day back. And that's highlighted in the report. It's highlighted on my screen here. Here's the level in the NDX. Here's the level in the Russell, and then you can see it in the SPX and the Dow. Okay, now let's take a look and see what the technical picture is telling us. And I keep very simple technical work. I do not use oscillators. I'm not a proponent of overbought and oversold I use the terms extremes, and the information you see on my screen here is derived from NYSE data. The red line is NYSE advancing issues. It's a 10-day moving average. The green is a 5-day moving average of NYSE advancing issues. And breadth is the net advancing minus declining issues, NYSE issues. As I've said a skillion times, this is a blunt instrument. It cannot be rote traded. It helps to identify market condition. It must be used in the context of market conditions. Specifically, are we in a bull trend or a bear trend? And since we're not real sure we're in a bull trend or a bear trend, it makes using this with Bryce a little bit tricky. Now, that said, just looking at this as of the cash close on Friday, you have a pretty significant divergence in the 5-day moving average of NYSE advancing issues. This will typically be a real heads up that we're close to some sort of top. Now, Wednesday's Fed meeting could blow this up, and we could be up by Friday. We could be up 3 or 4% from wherever we closed on. By next Friday, we could be up 3 or 4% from the close this past Friday. So we have to wait on that. That's just the reality of the situation. But this is sort of a heads up. Now, that said, and this is where interpretation and art comes into play in interpreting this stuff. I mentioned way back here on the 12th that we had reached an extreme in the 10-day moving average in breadth we hadn't seen for a couple of years, and that could be bullish. It could be a momentum kickoff. But I also said we could be near a short-term top, and I pointed to as a warning, even if this is going to mark a momentum high and we're on the cusp of another leg down, that the market could go considerably higher first, and you set up this series of divergences, similar to what we had back here in August. Back in August, we had this momentum peak in breadth. Now, this was an even greater momentum peak than the one in August. But from this August peak where we had the greatest reading in NYSE 10-day moving average advancing issues, the market traded about 5.7% higher. Well, if we were to trade 5.7% higher from the high on the 12th, that would be about 4,200. Now, that's a key reference area. I marked that on the chart in the report, and basically it's right in here where we had this big drop, and that would close this gap. So that would be something else a lot of people would be looking at. So that sort of makes sense if we were to get up there. But who knows how this thing is going to react on Wednesday? We'll just have to wait and see. Okay, now let's take a look at something else here. I want to look at the VIX. VIX is dropping, and VIX below 20 is typically what you get in a bull trend. So are we in a new bull trend? I don't know, but the market is not going to go down much or for long with VIX below 20. So again, that remains to be seen. Now, the last chart I want to show you, this is this happens to be a daily chart of the ES. The red little horizontal markers indicate Fed meetings. So I stared at this chart all weekend long, trying to discern some sort of pattern following a Fed meeting, and I really can't find one. The market last year was down considerably from high to closing low, but the path that it took was extraordinarily choppy. Each leg down, every single leg down was deeply retraced. So it's not like we had some big capitulation event. I have never seen a solid intermediate term low, even in a bull trend, without more capitulation than we saw last fall. Now, this could be that time. I don't know. But we did not see anything resembling capitulation at this low. We saw no panic selling days. We had a VIX that was barely able to get above 35, and that may have happened one time. So that's just is sort of anecdotal information that has me suspicious that this is a low that is going to hold for the next year and a half or so. And I realize that's not exactly tradable information. I'm just pointing that out. So as far as tradable information is concerned, for the intermediate term, again, I said last weekend, I don't know. I would be cautious heading into midweek making any big bets in any time frames until after that Fed meeting. There are signs, though, that even if we get a spike up, we're going to have to read what follows that to get a good read on what's going on. This August high, ultimately way up here at around 4,300, is probably a line in the sand that should not be crossed under any bearish assumption. But again, I don't want to get too far ahead of things and get too deeply into if, and, or buts. Like you, I actually trade. So I'm just telling you right now, I don't have any big bets on. I won't have any big bets on until at least Thursday. And hopefully we'll get some sort of clarity then. You guys have a great weekend. And if something shakes out before next weekend, I will update. Take care.